Sell-off on D Street. Nifty and Sensex fall 0.5%. Broader markets see sharper cuts. Mid-cap index falls close to 2%. Its worst day in 2 months. FMCG stocks buck the trend. BSE companies erase market cap of over 10 lakh crore rupees in the last 3 sessions.
Positive commentary coming in from Godrej Consumer and Marico add to the improved outlook shared by peers like HUL, Britania and Dabur on rural demand, easing of cost pressures and volume growth. Growing optimism boost all those FMCG stocks.
Lupin falls 6% on a weak fourth quarter. Revenues and profits miss estimates. Both US and India sales show sluggish growth, but the management expects to grow at 10% this year. Hello and welcome to Markets Forward, your go-to show where we aim to get you all of the key data points that you need to gear up for the next trading session. And also, we, of course, analyze the day's market events in action. I'm Shilpa Upadhyay, and as always with me on the show is my colleague Nigel D'Souza. Nigel, the color is still red. I'm still getting it right. I mean, no respite for the bulls really in the market.
Well, that's right. In the next 20 minutes or so, we'll take you through all that happened today. But Surabhi, let's first just do a quick recap of what happened during today's trading session. The market is a little bit jittery ahead of elections. It doesn't go to say that we're going to see any kind of major surprise. But getting into an election verdict, well, you normally see the markets get a little bit jittery. And that's what happened even in today's trading session. And the sectors that came in for the biggest selling, well, they were the ones that have gained the most. Metals, the PSU theme, pharma this year has done very, very well. And all those 3 indices, they were the biggest losers in today's trading session. What outperformed then? FMCG was a place to hide because now, that commentary has turned around a little bit. Let's get some of those indices up for you on the screen. So the FMCG index, it's been under-owned and commentary is positive. So that was the big outperformer. IT for the second day running is looking like a place to hide because today in a wobbly market, today you did see a big recovery out there. You'll be worried about the VIX. The VIX a few sessions ago was only around 10. Now it's moved to around 17. So a big surge is what we saw. But I'll tell you what, 2024 could be a repeat of what we saw in 2019. What did we see at that point of time? We saw the VIX surge up by close to around 50%. And then post the election verdict, the markets were satisfied, so it corrected. And, what happened was when the VIX went up, we saw the markets correct by close to around 500 points. This time around as well, we have seen a 500-point correction on the Nifty with the VIX move up close to around 70% odd. So for the time being, Surabhi, I'll have to say that it is par for the course, the kind of surge that we're seeing in the VIX. And maybe, going by what most experts expect, if the verdict is positive, then we'll see both those two return back to mean, like we saw the last time around. Surged up the India VIX and then corrected. The Nifty corrected and then jumped back up.
Let's see if 2019 indeed repeats or not. But I think in the interim, we perhaps will have to live with the higher volatility. The fall hasn't really started today. This is a pattern that the market has been making for the last several sessions. Earlier, it was just about, opening with a gap up and then closing at the lows, which is why in absolute terms, the market wasn't falling too much. Today, it was, just an out-and-out fall. Fifth running day that we're seeing the same pattern, the market unable to sustain at the day's high. If we talk about the constituents, of course, Nigel has mentioned that even, the almighty PSUs, even they are beginning to crack. Today, the banks were down. The Bank Nifty, by the way, ended with a cut of about 1% and a quarter thereabouts. But the real issue with the market is the mid-cap index and the way the broader market is dealing with the jitters and the sell-off that's coming in. The mid-cap index was down 2%. At one point in time, it was down almost 2.4% thereabouts, that particular index. The advanced decline ratio, absolutely bleak. I mean, you've got 1,800 stocks on the red side of the screen and just about 500 advancing stocks. So basically, at a portfolio level, it's becoming a bit difficult for a lot of people out there. Going forward, of course, we have to see real estate has been falling, but FMCG has come back with a bang. And we'll analyze a lot of these FMCG stocks as we go forward because the market's really hoping that perhaps these will really provide that cushion and they'll remain true to nature defensives, as they are called. And perhaps what we are seeing here, also because of fundamental reasons, not just because the market is falling, that this will perhaps continue. More on this as we go forward. Let's tell you about the lineup today and what all we've got in store for you. We'll start up with the key movers and shakers, tell you all the stock-specific action of the day with Vivek. And then we put the spotlight on the FMCG sector. What is causing so much of green on the FMCG screen? Stocks like Marico, Dabur, Britania, all of them rallying following a good show in the fourth quarter. So we'll we'll delve into all of these factors that are driving this sector's rally. And then, of course, so we will take a look at all the key events to watch out for tomorrow. It's a very heavy, earnings-heavy day tomorrow. Stay tuned because we'll tell you about the big names that you should be aware of. But first, today's action. As always, Vivek has all the details. Vivek, over to you.
Well, thank you so much for that. Today was a day where we saw significant selling pressure. So we found it tough to actually find stocks that were doing quite well, apart from the consumption pack. So first, we will have a look at the consumption pack. All of the names today did very, very well, especially, as far as the NSE 500 was concerned. Most of the top gainers, in fact, were from this particular pack itself. So marico led the way, Goddess Consumer, Dabur, Jyoti, Mami, all of them doing very well in this session. The other pocket of the market that did quite well was the other defensive sector, which was the IT pack. IT too saw some amount of a rebound from the recent lows. So led by Tech Mahindra, all of the IT companies today moved up around 1% in the session. The third stock on our radar, and amongst the few that actually did quite well in the session, was Titagarh Wagons. Why did this stock do well? Morgan Stanley initiated coverage on the stock. They have a buy rating. They see very strong earnings CAGR. In fact, 28% earnings CAGR between FY24 to FY27 is what they see, and that is what kept the stock perked up in the session today. But on the other hand, quite a lot of stocks, quite a lot of sectors witnessed significant selling pressure. The entire metals basket today, amongst the top laggards, the ferrous names, in the aluminium names, Hindalco, all of them witnessed significant selling pressure. The other stock was SRF, was under pressure throughout the day. Negative read-through coming in from peer. Towards the close of the session, the company gave its results muted quarter, and along with that, even commentary quite muted. They expect recovery only from the second half. Lupin was the other stock that, despite having a inline set of results, the stock reaction was quite strong, down over 4% in the session. Voltas, expecting the results anytime, but this particular company too ended almost 4% lower ahead of its results. And lastly, Graphite India, declared its results QOQ to certain amount of weakness, and after that, the stock down almost 5%.
Okay, all right, Vivek. Thanks a lot for joining and giving us that quick update. Well, joining us on the show today, we have Jai Bala of CashTheChaos.com. Hi, Jay. Thanks a lot for joining in. Well, tell us about, how you read the trajectory that we're seeing on the Nifty. We're down 500 points from the top. But where do you see support coming in there? We've broken the 20 DMA. We're on the verge of breaking the 50 DMA, I think so. So where is support out there? And do you expect a sharper correction? And post that, maybe we bounce back?
Hi, Nigel. You started out the show with the right instrument. You spoke about the Nifty VIX. And Nifty VIX is actually coming out of a cup and handle pattern by closing above 16.6. It's completed a cup and handle pattern, so that projection could point to higher volatility. But the important support for Nifty is at 21,770 to 21,710. As long as that's not broken, the markets are safe. But if it were to get broken, the markets run a risk of entering a medium-term correction. So that's the reason why I spoke about VIX. And VIX is pointing to that possibility. And we have Reliance, the heavyweight, clocking lower highs, and Adani Enterprises coming out of a head and shoulders top. So, in the past, the Nifty has come very close to significant supports and then gone back to record highs. But now we have two heavyweights that are coming out of a negative pattern, and also Nifty VIX coming out of a cup and handle breakout. So we should be prepared in the event the markets were to go below 21,770, but no preempting the markets. We'll be watching this with Hawkeye.
Okay, fair enough. Jay, stay on. We'll have more questions for you in just a bit. Let's actually move to the sector of the day, and that really was FMCG. Stocks were flying following either some positive takeaways from the Q4 numbers themselves or positive management commentary. In particular, of course, we heard from Godrej Consumer and Marico over the last 24 hours, and they added to the improved outlook that has been shared by several peers like HUL, Britania and Dabur. A lot of talk about perhaps rural demand picking up. Manglam is here with more details. Manglam, lots of green, only on the FMCG screen.
Yes, that's correct. In fact, over the last 1 week or so, from all the managements that we've been speaking to, there are a bunch of common threads that are playing out for the FMCG stocks. And that's telling you why maybe, these stocks were waiting for a bit of a rally, and that rally came by in today's trading session. Let's see whether this sustains or not. chances are it may well. Reasons are 5. The first one, of course, everyone has been speaking about green shoots in the rural economy in the fourth quarter, and this comes after 2 years of underperformance by the rural sector. Rural accounts for nearly 35 to 40% of the FMCG universe's revenues, so any improvement out there bodes well for the revenue. We've heard from HUL, Dabur said that rural is growing twice the urban pace and now will lead recovery going forward. Secondly, we believe that all these FMCG companies, because of rural recovery, have the confidence to go ahead and guide for double-digit revenue growth in FY25. That is a positive because over the last few quarters, the one thing that was missing from FMCG numbers was revenue growth itself. So with double-digit revenue growth, the street would, be penciling in good EPS estimates as well, largely because the margins are likely to now remain in the elevated levels that we're seeing itself. Why is that? Because one, inflation is contained, and secondly, these companies have already taken cost cuts and increased their ad spends, etc. to a comfortable level. So revenue grows, margins stay the same. And all these trends which picked up over the last couple of years, be it, new channels that are doing well, QCom, eCom, modern trade, as well as some of the premium products which are growing at a faster clip than the overall portfolios of these companies are likely to sustain as well. So that's the fourth trigger. And the fifth trigger in particular would be for companies that are scaling up acquisition. Godrej, for instance, will scale up the Raymond consumer business acquisition. Tata Consumer has Ching's and Organic Foods. Whereas the other trigger would be all of them increasing their offline presence as well. Britannia and Marico have, embarked on a path of increasing their offline direct reach. So distribution and synergies of acquisitions doing well. Add to all of this, the fuel in the fire was the underperformance of the FMCG sector. Over the last 12 months, we've seen the index underperform the frontline index, the Nifty, which has gained about 25%. The FMCG index just 16%. And within that, a lot of these individual stocks, some large caps like HUL itself, accounting for, big chunk of losses there, down 7% if you adjust for today's gains. And ITC, Dabur, all of them have actually underperformed the frontline index. So maybe underperformance coupled with some fundamental triggers has led to this big up move that we've seen.
Okay, Mangalam, thanks a lot for that. Well, staying with the earnings of the FMCG space, Marico delivered their fourth quarter numbers. Speaking of CNBC TV18, Saugata Gupta, MD and CEO of Marico, said that the firm saw an uptick in rural consumption towards the end of quarter four. He added that they are better placed to deliver double-digit revenue growth in FY25. Let's listen in.
I think we had a lot of stress on rural. Having said that, I think as we completed quarter four, towards the end of quarter four, we saw some green shoots and some uptick in rural consumption. Overall, if I believe that, I think we are much better placed to deliver double-digit revenue growth next year. So now we are well positioned in terms of growing food at a margin which is acceptable to us.
Okay, so that's a whole bunch of FMCG stocks that were in focus, on the positive side of things. Godrej Consumer also delivered in the fourth quarter. Asif Malbari, CFO of the company, said that rural demand was picking up. He also expects volume growth to sustain at high single digits. Listen.
As a company, we have said our aspiration is to stay in terms of high single-digit volume growth. So we should be able to sustain that kind of performance going forward next year also.
Okay, all right. Shilpa Rout as well joins us on the show. Shilpa, hi. Thanks for joining in. What's your view from these FMCG stocks? Which one, looks like it can bounce further from here on? HUL saw a big bounce. That's been a relative underperformer. But a couple of these other names as well have done very, very well in the last 3-4 sessions.
Yes, of course, HUL stands the, brightest chance for an up move towards 2500, 2550 again. It has moved, the resistance of 2300 is holding there, and this up move of today surely hints on something that is cooking very strongly. And from here, expect HUL to test 2500 zones again. Apart from that, even if you look at Godrej Consumer, it is also trading above 1300 now. It is all set for a good monthly breakout, and I believe that the stock will test towards 1450 to 1480, little positional from here.
Okay, all right, got that, Shilpa, thanks. Let's quickly move on and talk about the other stock of the day. Shares of Lupin slipped close to 4% after the company's revenues and profits missed estimates in the fourth quarter. The firm's US and India sales saw sluggish growth and were below expectations. Ekta is here with more details. Ekta, so Lupin not quite making the cut this quarter?
Well, yes, revenue was up around 12% odd. The street was anticipating a 14% growth, so that's probably where the disappointment came in. The margins were in line with expectations. The margins came in at around 20.1%. The street was anticipating 19 to 20%, and it's 20% for the second consecutive quarter. The management was quite positive in terms of sustaining these margins going forward as well. But they said that getting to 22 to 23% would probably take some time. Now, adjusted profit was around 550 crores. There was an impairment of around 201 crores. So adjusted for that, the profit was in line with estimates. North America, 39% of sales was at the lower end of estimates, $209 million, plus it declined on a Q-on-Q basis. And hence, that's probably where the disappointment stemmed from. The company did say it was due to seasonality in the US business this quarter, which resulted in the weakness that we saw. India, growth was around 8.3% year-on-year. It slowed as compared to 13.4% growth in the previous quarter. The management said that too was because of a slower quarter for India. It was a bit of a disappointment for them. They do expect growth to pick up going forward.
It was a good quarter from the standpoint of the baseline business as well as the new product launches. The only reason the revenues were a little bit below the previous quarter is because of the seasonal products, but both the anti-infectives as well as albuterol, which is a bit seasonal, was a couple of million down. But products like Suprep were very solid. Tiotropium contributed more this quarter versus the previous quarter. Darunavir certainly had competition, was the largest pricing pressure because of additional competition last quarter. I also want to say that, the effort around growing the business profitably has continued. So the profitability of the US business improved quarter over quarter.
Well, as you know, we don't give guidances, first of all, but I think we've been inching up. We've basically been talking about double-digit growth on the top line. I think we'll get to pretty much close to 10% for FY25 as well. Ramesh has already talked about the EBITDA margin. Clearly, in the last 3 quarters, we've shown the margin increase to that 20-odd%. We'd certainly keep it there and hopefully inch it up a little bit. I think Ramesh didn't give you a time frame, but I think it's going to be a couple of years before we get to the 22-23%. I think there's more top line as well as more optimization that we need to get in place. Right now, we want to firmly entrench that 20+% before we build on that. But I think we'd expect growth across the board in the US, obviously driven by products like Mirabegron. If we can bring that back to market, we have other products as well. But India, we're growing very well in other markets like the global institution business or EMEA or the like. So, so I think 24 was a year of resurgence or bouncing back. Again, I think this is a year of building on that even more.
Okay, all right. Well, let's get a call on Lupin then. Jay, what's your view on some of these pharma names? Some of them have done well, so maybe it could be some profit taking. Any kind of miss is getting smacked. Lupin or any other pharma name, that's how's it looking on the chart?
I'm bullish on most of the pharma names, Nigel, but most of them needs a pause. So a negative results or a miss on the earnings could be the much needed pullback. If you take Lupin in particular, it's tripled from 610 to about 1800. So, if the stock were to drop somewhere close to 1440 or 1360, that will be a much needed correction. I don't think the high it saw at about 1700 plus in the beginning of this year, that's a complete move. So I'm definitely bullish on the medium term. Lupin could even be, bullish in the short term too. So I'm watching for some pullback to come through, but in the short term, the next move up could be the final move higher.
Okay, that's Lupin. Shilpa, we were just also mentioning SRF earlier. Again, result disappointment playing out over there. Any levels to track on the stock?
Yes, so it would be SRF on a monthly basis. If you see, it has given a very bad breakdown and it could test from here 2320 zones. But on a longer time frame, let's say around 6 months, you see that it is also at a crucial support of 2400 zones. So a breach below 2400 will definitely see the stock dragging towards 2350 to 2320. And if it's holds here, then probably a little bounce back towards 2450 cannot be ruled out.
Okay. All right, Jai and Shilpa, thank you very much. We'll leave it on that note for today. Appreciate you taking out the time and joining us on the show. Need to take a quick break right now. Come back on the other side and we'll tell you about a lot of the corporate commentary that we picked up today, along with the events to watch tomorrow.
Welcome back. Well, let's take you through all the top corporate voices that joined us during the course of the day. Let's start with CG Power, which delivered a mixed performance in Q4. We spoke to the MD and CEO, and he's guiding for a 20 to 25% revenue growth in FY25, with margins at around 15%. He adds that the industrial segment is seeing some stress, but expects improvement post the elections, while prospects for the power system segment continue to look up.
Birla Corp reported a good set of numbers in the fourth quarter for FY25. The company guides for EBITDA per ton and volume growth of 8 to 10%, factoring in a tepid first quarter as demand is affected by elections and the heat wave. However, the company is anticipating a pickup in demand after elections. Okay, and before we wrap out, as always, let's talk about all the key market events you need to watch out for tomorrow. And the list is going to include a lot of important earnings. We have Sonal standing by with the details. Sonal.
Well, let's start with that. Earnings, right? A long list there, but let me list out the important ones. Hero MotoCorp from the Nifty pack will be the one to watch out for. We have Tata Power as well, which will be in focus. There's Canara Bank, Bharat Forge and GSPL as well. In terms of some other corporate actions, dividend ex-date for Dhampur Sugar and Laurus Labs, so watch out for that. There's extraordinary general meeting for Borosil Limited, importantly for Vodafone Idea and Indus Towers as well, so that will be important to track. Two IPOs open tomorrow. We have Aadhar Housing Finance and TBO Tech IPO. And one IPO closes tomorrow, which is Indegene. So those are a couple of new names that we'll be tracking very closely. In the global market action, we have the non-monetary policy meeting by ECB. So less action on the global side, but a lot in our own markets.
Okay, thanks for that, Sonal. Well, on that note, though, we'll have to wrap up on this edition of Markets Forward. You stay tuned. More news and updates on the other side.